Oh yeah, we're ready.
Okay, Holly, thank you very much for opportunity to introduce myself to you and your team. Okay, we are direct lenders, mortgage brokers. We've been in business as a company for 11 years. We have office in Vienna, Tyson's Vienna, and I have been doing loans, since I would say 2001, 2002. I've done like personal loan, business loan, cash credit, bill discounting. But here in America, I've been originating loans since 2013. You know, what I would like to kind of go over some of the things what we are good at. Our average clear to close, I would say, is 15 days to like 15 to 17 days. We have very competitive rates, so you have buyers who are shopping around, they can check rates with us, and majority of the time we'll be able to beat the rates. We do have really good team. We have close to 12 languages in the office, so we have people with different languages.
I know Spanish, English.
Yes, we have Spanish, English, Hindi, Urdu, French, Arabic, Vietnamese, Thai, what else? Farsi, Pashto.
Farsi, Pashto.
Farsi, Pashto. So we have like a good number of languages in the office. DMV is very diverse. So having multiple languages will be really handy. You will have realtors, where they're working with the borrowers, where they need a loan officer who speaks certain languages, and we'll try our best. Google reviews. This is also a very good I think component, especially for the realtors. Whenever you guys are using my pre-approval to submit an offer, and majority of the time I get calls from the listing agents. They will see whose letter you're using. They will Google, and if they Google us, they will find nothing but 5-star reviews, hundreds of reviews.
The local lenders like Mr. Imran, like people actually go for reviews.
Yeah, they check
Anytime I
reviews.
send an approval, they're like, hey, we just looked them up online. That's very helpful. We have catching up to do. He's at 370.
Yeah.
reviews.
Oh yeah. So before, I used to use Zillow, and then I was like, okay,
Yeah.
no, I want to go to a platform which can last longer, and Zillow has their own thing going on. So that's why we had to change from the Zillow to the 5-star. The Google reviews. Yeah. So what all state we are licensed in? We're licensed in so far 8 states. Washington. Yeah, Washington, D.C., Maryland, West Virginia, Alaska.
In Alaska too?
Yeah, we have a loan officer. She lives in between, Virginia and Alaska, and we've been doing good amount of loans over there too. Yeah, especially refinances with the recent rate cuts.
I didn't know you were in Florida, which
Yeah,
is good.
yeah, Virginia, Florida, Pennsylvania, and North Carolina also. So we are working on our next Texas. We've been getting a lot of inquiry for Texas and state of Washington. I'm getting, especially realtors are calling, and they want us to kind of, be licensed. So I'm working on these 2 states. Okay, so we do all sort of loans. We do regular conventional, VA, FHA, USDA, non-QM. And that's what today I wanted to kind of talk more on the non-QM. A lot of people, and especially realtors, are not familiar with the non-QM products. Non-QM products in
What does QM means?
quality mortgage.
Okay, quality mortgage.
Yeah, so they're hard.
Non-quality.
Yeah, there are certain standards on the mortgages, which they have set up. But if your borrower does not fit into regular conventional VA, FHA, there are a lot of programs which go under non-QM section, and we can qualify more borrowers.
I think in the I don't know, in the states you're in DC too or no?
Yeah, we are.
Or DC as well. Okay,
So see, we are.
Washington DC.
Yeah, so we are in DC, Maryland, West Virginia, Alaska, Virginia, Florida, Pennsylvania, and North Carolina. So far 8 states. So we can do loans in any of these states, and we also do commercials. So we'll just kind of go over a little bit of what these non-QM loan products are. See, why do we even need to look into the non-QM products? See, when you have a borrower who does not have a regular W-2 job or does not have tax returns, who fits into regular, like self-employed guidelines, So that's when you look into the non-QM products. The bank statement only is one of the really good product for the self-employed borrowers. What they do under this program, they don't look at your tax return. They don't need your pay stubs. They don't need your W-2s. They will look at your 12 to 24 months of bank statement, and they will look at the business deposits. So whatever business you have, let's say you have your realtor, you have real estate commissions coming in. So they will look into last 12 months or 24 months of real estate commission income.
As personal bank statement or either?
Yeah, we can use personal or business. If the deposits are in a personal account, so whatever deposits you get, they divide into 12 months or 24 months, and that will be your monthly income.
But the bank statement you can buy as a primary residence.
You can buy as a primary residence, you can buy a second home, you can buy investment property also.
How many investment properties you can buy using that?
Yeah, I think you can go up to 10 properties.
Okay, you can go up to 10
Yeah,
properties.
and this is, I'll tell you, I have seen like numerous time, I would say, self-employed borrowers, they normally do not have that much of income shown on their taxes. They have really good gross income, but their net income is not that much. So under this program, they will not look at your bank statement, the tax return. They will only look at your 12 to 24 months bank
But
statement.
their interest rate is a bit higher.
I would say interest rates are a bit high, but it's not that much, because lately the rates that have been locking under this program around, I would say, 6.875 to 7.25. 6.875. I'll tell you, that will cost maybe half a point. In some cases, I have even locked 6.875 without any points. So this has been really good for last couple of years.
But
this has been really
40% down.
This is, we can do with 15% down also, but when you have lower down payment, obviously your interest rate will be a little bit higher.
Yeah.
And even if you're going 15% down, there is no mortgage insurance on that one. That's another good thing.
Even with 15, no mortgage insurance.
Yeah, and I have qualified borrowers, let's say on their tax return, they cannot even qualify for $300,000 loan, but with this one, you can go up to $1 million, because people do have good deposits. Even a lot of borrowers, with the Uber drivers,
Yeah.
they have like maybe $80,000, $90,000, $100,000 gross income. But when they file taxes, their net income is maybe $30,000, $25,000. And if we try to qualify them under regular conventional or FHA programs, we cannot. But here, if they can put a little bit more down payment, we can use those deposits as an income, and we can qualify them.
What's the credit requirements for that?
Yeah, I would say credit requirements, there are, because see, we're mortgage lenders and brokers. So we can do non-QM loans as an in-house loan and as a broker also. I would say best credit score for these loans will be 660 plus. Minimum 660 plus. Obviously, if you have a better credit score, you get better pricing, for these bank statement
What's
loans.
the difference between I see P and L only? Is
We'll go over there. And see, on a bank statement only loan, we can use your personal bank statement, or we can use a business bank statement also. Only difference we have to, and in terms of, I know you as a realtors, you guys don't want to get into calculating income and all that, but when you're using business bank statement, easiest way to kind of, do the numbers, let's say 12 months of bank statement we're using. 12-month bank statement, you have to count the business deposits, not the other deposits you got it like as a gift, or maybe you had like your wife transferred some money, or business deposits divided by 2 and divided by 12. That will be your monthly income on a business bank statements.
But if someone is using business bank statement,
Mm-hmm.
that doesn't mean they have to buy under the business name.
Closing under business? No, this will be closed under personal
name using business bank statement.
business bank
Okay,
statement.
that's
For example, Remax Galaxy. You have the Remax Galaxy, a bank statement.
Lot of deposits.
A lot of
coming in.
deposits coming. So they will not look at what's your net. They will look at what are your business deposit as a company. And let's say you have $400,000 deposits. divided by 2 because they can use only 50% of the business deposit unless you get letter from CPA that your business expense ratio is much more lower than 50%. So that's also another key.
I think people can get.
Yeah. If you are getting a letter from your CPA accountant who's filing the taxes, confirming your expense ratio is, less than 50%, so then we can use that ratio.
Whatever ratio they say, you can use that.
Yeah.
If they say 20%, then you can use 80% of that.
80% of those deposits. And that's why I'll tell you, this is one of the loan program, I would say, since LonQM came into the market. In last 2-3 years, I have closed good number of loans under this program.
And you can still do 30-year fixed.
Yeah, you can do 30-year fixed, 20, 15. That's absolutely possible. And there is no prepayment penalty also on this one.
You can pay in like 6 months.
Yeah, you can pay off within 6 months also, but normally, whenever you pay off the loan within 6 months, loan officers, they get EPOs, the penalties to the loan officer, but there is no prepayment penalty here. So you can buy primary residence, you can buy investment properties under this program. Okay, then another popular program has been DSCR. And everybody's talking about this program.
What does it stand for? Let's figure that out. What does it
Let's
mean? What is DSCR?
That's I think, let me see.
Maybe.
I think, yeah, I know. Not ChatGPT, GTP.
GP, no, just GP. They've been calling it
GTP, yeah. So DSCR has been really debt service coverage ratio. That's what DSCR means, In short, this is very good program for investors. This, you can purchase property even if you are IT borrower. Right now, I have a borrower I'm working who's a foreign national, who's maybe I think he is a Canadian citizen, I guess. He works in somewhere in Gulf countries, and he is looking to purchase an investment property. So he's purchasing property under this program. Foreign national, only 30% down. 30% down. See, one of the biggest key factor in DSCR loan is whatever your mortgage payment plus HOA or condo fee, that should be equal to the amount of rent you can get for that property.
This is for investment only.
This is for investment properties.
But this one has a prepayment.
This one will have a 1 year, 2 year, 3 year, but there are options where you can have this loan without any prepay. But again, whenever you're removing prepay, your interest rate will go higher.
What's the big difference between this and the bank statement?
Bank statement bank statement loan, you are still using income to qualify. Here, you're using a potential income, a rental income to qualify for the market. That's the biggest difference over here.
But what are the paperwork requirements, just down payment pending?
For DSCR?
Yeah.
DSCR, it will be just your regular IDs, your driver license, if you are green card holder, let's say green card, your 2 months bank statement, 1 month bank statement to show that you have money for down payment, closing cost, and they require, depending upon your credit score, maybe 6 months to 9 months reserve.
But this one is only for investment.
This
bank
one.
statement you can buy investment or personal.
Yeah, your bank statement you can do as a primary residence,
Or-
as a second home, or investment property.
What about gift? Can you get gift from both of them? And like if gift funds are okay?
Okay,
Both?
so that's a very good question. Gifts funds are allowed 100% on a primary residence.
Okay.
When you are purchasing investment property, they will require 60 days of seasoning. So that means funds needs to be sitting in your account. But recently, DSCR programs have really improved. You can use gifts to purchase DSCR, you can use gift to purchase a property under DSCR loan.
So now they are,
Only the reserve has to be yours, and the seasoning is only 30 days.
reserve of 6 months.
6 months reserve. Whatever your mortgage payment plus your HOA condo fee, let's say that's $4,000 into 6 or into 9 or into 12, depending upon your credit scores. Yeah. So DSCR is really good program, guys. If you are not, taking advantage of this program, if you have a borrower, and we can do in 50 states. I don't need to be licensed in any state. If you want to do this loan in, let's say, in even Tennessee or state of
We have a couple
Washington,
of guys
California,
in this.
we can do
Look,
anywhere.
one of our client, he was getting a loan with the builders, and the builders denied his loan. He's doing the same, right?
No, that's a different one. That's another one. That's, I'll tell you. But this
Okay.
is, by the way, see, I can go into details, but I want to make it like very short, like this video, a short video, and then we have done one-on-one, trainings with the realtors. Like one of your new realtors, Ona says she came on board, I think recently,
Yeah.
and we had like spend that hour or two to kind of understand the products more in details, But I just want to go over the bullet points. So DSCR, what you need to remember, it's for an investment property. Minimum down payment, 20%. What you need to kind of keep in mind, your mortgage plus rent, that has to be equal. If your rent, the mortgage plus HOA is like $3,000, so you need around $3,000 rent from there. By the way, lease will not be acceptable here. It's not like your borrower has a lease for, let's say, $5,000.
We cannot use that.
No, the lender will do something called rent schedule, like how we do appraisal to determine the value of the property. So lender will do a rent schedule that they will figure out what is the rent for that property. So the license appraiser will go run the comps and come up with the number. Let's say the rent for this property is $3,000, $4,000. That is the number we will be using for the DSCR. Credit score, 660, 680. Standard 660 plus will be the good. Obviously, you have 700, 800 credit score, you'll get better rate. There are DSCR, you have to remember there is a prepayment penalty, but you can avoid that by paying a little bit higher interest rate, or you can purchase that. Another really good program not many lenders are doing is no income document for primary residence. I have had borrowers where they had money. I had like first DSCR, the no income document program I did in my life was, I had one of the borrower, her husband had recently died, and they wanted to sell that house because they no longer want to live in that house. She was not working, but she had a good credit and a good amount of money from the proceeds of that house. So currently we can do this only in Florida, in Virginia. All I need is a 20% down. Okay, I do not need that rent coverage thing. They will not be looking at what the possible rent will be, because this is for a primary residence. Only 20% down. Minimum score requirement is 680.
What's the catch? Any catch?
There is no catch on this one. Obviously, whenever you are, lending and finance, it's all about risk management. So whenever the lender is lending you money on such a programs, obviously rates will be higher. So over here, your interest rates are going to be, again, interest rate is a very complex subject. It depends on a lot of factors, but I would say rates here would be at least, let's say standard rates are around 6.5. Here your rates will be like 8.5 to 9%. So around 2.5 to 3% higher interest rate. But there is no prepayment penalty. You would need 20% if you have 720 plus credit score. If you have a less than 720 to up to 680, then they will require you to put 25% down. If you are buying a condo, one of the borrowers we have been working with you, whenever you're going for a condo, again, condos are considered a little bit riskier investments for the lenders. So when you're doing a condo under this program, then you require 25% down. They will not look at, documents are so easy. Your IDs, 1 month bank statement, and they will require, it's not a catch, but their requirement is the reserve. They will require at least 9 months of reserve. So whatever your mortgage payment, HOA, that into your 9 months or 12 months, again, depending on. I had, I think recently I closed one of the purchase. They purchased $3.7 million property in Vienna under this program.
Oh, wow.
Because they knew that, their taxes were not good, but they were getting really good property. See, this program can be also used to kind of, sometimes you come across a property which is really a good deal, or which is something like buyers, like that fits, maybe let's say they have 10 wish lists out of you're getting 7 or 8 and they really want this property. So they can purchase this property get their foot in door, secure the property, and after a year they can refinance into regular ones. There are no penalties for this. But primary residence, minimum 20% down, 680 plus credit score, 9 months of reserve. Okay?
You said no income requirement?
No income required. We're not going to look at bank
Only 9 months of,
reserve.
when you were saying initially that they were selling that other house that they had, so they had a lot of,
Now they had already sold.
so that income was sitting in the bank.
Yeah, they had money sitting in their account.
So did that help? As opposed to, bank statement only loan, they're showing bank statement.
See, bank statement loan and this program. Okay, so bank statement and the no income document program. See, bank statement, you're still looking at the income, but lender is deciding what the income is. They're looking at your deposit. Let's say we're using personal bank statement, 12 months bank business deposits from the
So there
business.
some kind of income is coming.
Yes.
No income is coming.
Yes.
So they're seeing the reserves sitting in the bank, a lot of money sitting in the bank, not just 9-month reserves.
No. Yes. So I'll tell you, under this no income document program, they are looking at your credit first, right? 680 plus or 720, 20% down, and 9 months reserve. That's it.
That's
They're not
all
looking at,
they need.
yeah, they don't need it. That's why I'm telling you, this is really good program. Because let's say if somebody is looking to purchase $1 million property, in order to qualify for $1 million property, they will have to have a really good amount of income. But here there is it's not a catch, but it's obviously the price you pay. Yeah, which is a little bit like, let's say 3% higher interest rate. But average people, like what, 5 years, within 5 years, they will either sell the property or the refinance. So you always have that option when their situation changes. Maybe they will, they will get a job after a year. Their job situation can change. They can refinance into regular conventional loan and reduce the interest rate. And as you all are local DMV realtors, you know that what kind of appreciation you have in DMV market. If you purchase a property, hold on to 1 or 2 years, you will make more money than the amount of interest you want to pay on that property. So please remember, this is really good program for a primary residence one. Okay, then foreign national. I don't know how many of you come across foreign national, but this is also a good program. So foreign national is exactly the DSCR program, you can say. But over there under DSCR, you need minimum 20% down, but here you need 30% down.
But they need, let's say if someone doesn't have, they need to have a visa at least, right?
Okay, yeah. So documents, I just did the pre-approval last week, and borrower himself was like, "That's it? You don't want anything else?" I was like, "Yes, you don't. I don't want anything else." So I said, only one thing we need to remember again, like a DSCR ratio. Your mortgage and HOA should be equivalent to the amount of rent you're going to get for that, because he's a foreign national, so it cannot be your primary residence. It has to be an investment property.
And if
So
the
what-
rent is lower, then they have to put more down to bring it there.
Yes.
Yeah.
They can, how can they work on the DSCR ratio? Obviously, they can put more down payment or get lower interest rate, the purchase rate, and that's when they try to kind of bring that.
Share with the foreign nationals, are they able to live there for a certain amount of time?
No, foreign national is for an investment property. So this is foreign national. They cannot live here.
I have some, I was dealing with the foreign national where they were here for the Brazilian army for like 2 years. They wanted to buy, and then when they left, they of course would use it as investment.
Oh.
But they wanted to live here in the property for a little bit of time.
Yeah. No, these are the foreign nationals. What we do, these are strictly for investment purpose.
Okay.
Document-wise, your question was, I need their valid passport from whatever the country they are from. Let's say they are from Brazil, right? So I need their Brazilian valid passport, which is not expired, a visa to come in here, H1B1, what visitor visa.
How long the duration of a visa?
No, it should be just like, maybe 6 months, 5, like
or
at least.
is fine too?
Yeah, 1 year fine too. Even at least, I think with my experience in the mortgage industry, I've seen they normally at least require 6 months of, the visa validity.
Okay.
Yeah. So valid passport, valid US visa, US bank account.
Has to be US, okay.
US bank account. And the money, whenever the money comes in, let's say,
What if you have like a, like a international bank, I think city or that too?
as long as they are local here,
Yeah.
you have to have a bank account here in America.
Okay.
Yeah, so that could be Wells Fargo or Citibank or Barclays, which is like UK-based bank, international bank or Standard Bank and all those. So you have to have a bank account here. And you don't have to wait for seasoning of funds also, because of course funds are coming in from the abroad. So that's it. So you have to have that down payment, your closing cost, and 9 to maybe 12-month worst case scenario reserves. They do not require credit. Before, in the past, they would look at your international credit report or the credit report similar to credit report from the country you are from, but they no longer require.
No longer needed even credit.
Yeah, no credit required. This is very good program.
Very good.
As I said, like right now I have a borrower which I have pre-approved, and they're looking for $2 million properties, a guy from the UAE. Yeah, so good program to keep in mind. I think sometimes you do get inquiries, from the foreign national, can I purchase a property here? So you have this program which you can utilize. Now P&L, interesting program. P&L stands for profit and loss. Okay, you are Mr. Iftikhar, you are realtor. Okay,
Sure.
You don't wanna, let's say, you don't want to give me your bank statement, or you don't qualify on, let's say, bank statement only. You are not looking to even buy under DSCR, because maybe you want to buy as a primary residence. The P&L is really good program. All I need from you is, of course, the first credit, like 680 plus credit score, at minimum 20% down. A profit and loss prepared by licensed accountant. They have, like, normally accountants, they have their number, which is, they're authorized to prepare taxes with the IRS, or a CPA. A P&L, last 12 months P&L. So I just need a P&L. I'm not going to look at...
like now you need a P&L from November of last year.
Yeah.
Okay.
12 months profit and loss.
They won't look at the taxes.
We will not be looking at the taxes. This is a profit and loss. Whatever net income we see divided by 12, that will be your income. I have recently closed for one of my clients. I think she had the nail salon business, and she has a lot of cash, business coming in. She had a profit and loss prepared by her accountant, and we were able to...
Why would you go with P&L versus no income documentation? Maybe a better, better rate?
Yes, that's a good question. See, when you are talking about no income documents loan for a primary, that program is unique program. 20% down, just 9 months reserve, and you can buy. Loan amount can be up to $2 million, by the way. Under this program here, this no income documents for primary residence, maximum loan amount can be $2 million. So you can purchase, let's say someone can purchase $3 million property by putting $1 million and $2 million loan. So here, there's high risk here. So when you're doing this, so your interest rate will be higher. But for a P&L, DSCR, or bank statement, your interest rates are in similar range. You'd be surprised. You can go around maybe 6.875 to 7.5. P&L.
That's not bad.
It's a really good program. Average rates are what today? 6.25 rates. But you are just paying less than 1% higher interest rate.
I have a question. I recently did a loan, right, for myself, for another property. Maybe I should have done it with you.
Yeah.
But I think I have to check with her. I think she gave me a DSCR. Why didn't she give me a bank statement? I'm confused now.
I don't know.
She should have given me a bank statement.
Yes. Because bank statement loan is normally DSCR loan have the prepayment penalty and all that.
And then
but I would prefer, as a mortgage professional, if you
DSCR has a point.
Yeah. See, point. Every loan has a point, or every loan cannot have a point. It depends on the scenario, like what kind of credit score, down payment, program, and the type of property, or what's your purpose, and what
I
kind.
was just gonna hold it for like 1 year.
Yeah.
Don't want to go through all those documents, but I think I put a lot of money down.
Yeah, I
Maybe I
personally.
owned it under my LLC and I was trying
Yes,
to.
that's one of the, again, good point here. When you are doing, a DSCR loan, you can close loan under LLC.
But maybe that's why she did it. The property was owned
Could be,
under
could
my
be one of the reason.
LLC.
Like, see,
Yeah.
every loan officer does things differently. But if I have to kind of do a loan, and if non-QM is the only way, I would first preference, I will give it to the bank statement. Bank statement only. Due to the fact the prepayment penalties and better rates, I will go for that.
How quickly you can close on these PNL self-employed bank?
All of these loans can be closed in 30 or less.
But at least 30.
30 days. I would say when you are going with the non-QM loans
Yeah.
versus you have a conventional loan, try to keep a little bit of wiggle room. These are non-traditional loans. So keeping 30 days closing date will be really helpful. We can try to wrap it up. I have closed non-QM loans, in less than 20 days also. But my recommendation to you as realtors, keep 30 days, 30 days time frame. And sometimes when you are in the November and December, this is most wonderful time of the year, but things will not move. Yeah, for lenders, it is not that wonderful time of the year because of the, people taking holidays, like short of staff and all that. So that turnaround time can be increased, So all of these loans, I would say 30 days is a good time. Sometimes you may need a little bit more. Yeah. So PNL is a good product to remember. Again, 20% down, 680 plus. These are just bullet points. But see, guys, when you have a borrower, please discuss with the mortgage professionals. Every loan can be different. Their scenarios can be different. So their down payment, the credit score, all other factors, will have impact on your, credit, even the turnaround time and all that. See, then after profit and loss, okay, you have ITIN. This is for people who does not have a social security number. They just have a tax ID number. We can do loans.
You can get that.
you do not have a social security?
Oh, but these loans, not many people are doing them now because they are really in fear of getting deported. Right?
No, I think we still have loans.
So you still have this loan.
Yeah, we still have those loans. We can do minimum $50,000 to
Because
what?
I have some person, one of my contractor, he needs to buy a house.
Yeah.
He can still get it. He said he can't, or can he?
Yeah, he can.
What's the requirement for this?
What's the requirement? Regular, like they will have to pull the credit. Obviously, when we pull the credit, instead of using social security number, we will be pulling using the tax ID number.
What is the minimum down?
A minimum down payment, we can do up to 15% down.
Minimum is 15.
Yeah, 15% down. You can purchase a primary residence, or you can purchase even investment property
But
with
do
them.
they need? I'm sure they need a work permit or visa, anything like that? Or
No. They do not have that. They look into just like it's a pure ITIN. Whenever you have,
They're
I
not
have.
gonna ask for a visa.
Yeah, they're not gonna.
Okay.
They will not have that. I will see when you have ITIN borrowers. Let me know. I'll connect you with one of my loan officer who specializes in the ITIN
No,
loans.
I have someone.
Yeah.
I think I'll talk with him. I'm meeting him today.
Yeah,
So I'll
we
check.
can see. We can even go no score under this program. Someone do not have any score. We can
What
do
are
that.
the main requirements? Like income, right?
Income, yeah.
Can they be self-employed? Actually?
Yes.
Can they use?
Majority of the loans we have done, borrowers under these programs are self-employed people. So
So which are they going, bank statement route, or which route are they going?
now a good number of loans I have done is regular tax return.
Meaning they have to show income.
They show income. But if you have a borrower, we can do a bank statement also. This is a very flexible program.
Bank statement, loan.
DSCR, you can do DSCR for these people too.
Oh,
You can,
really?
yeah.
And bank statement.
Yeah. I'll tell you, this is a really good program. But you have to consider rates will be a little bit higher, maybe 1 or 2% higher rate. But there are not many options for the people with the ITIN numbers. So when you come across a borrower, please do not judge. Just say, okay, you are looking to purchase a house. I know the loan officer. Connect them to the loan officer, and then we will find solutions to them. Okay, so we can do we can go up to 600 credit score, or we can go even 0 score. They do not have a score. We can do that, but over there, you required maybe 20 to 25% down. You need a little bit more down payment. Even with the ratios, we can go higher. You know, regular conventional loans, your ratios has to be below 50. You can go up to 60 over there. Really good program, I'm telling you. Not and there are borrowers who are looking to purchase, but I think they're just afraid, or they think that they will not qualify. So keep that in mind. That DSCR is a good option. You know, a 1099.
Okay.
So
Interesting.
yeah,
That's
you cannot get the
1099.
yeah. So you are a realtor.
Yeah.
You get 1099s every year. Will not look at your bank statements. Will not look at your, like how we, for a bank statement only, we, you know, look at 12-month bank statement, do the calculation here purely 2023, 2024 bank statement divided by 24, and that's your income.
But 1099 is, what about 1099? Just 1099 for 2 years?
Yeah. So
But
2023 years, like this, 2023,
24, 1099.
yeah, divided by 24 months. That's your monthly income.
But what's the down payment? 20%?
Yeah, down payment. Most of these programs, see, non-QM loans can be done with the 15% down also. But when you are going less than 20% down on non-QM, you will have to then compromise on, you know, buying point or maybe a little bit higher interest rate. So it's,
Primary residence?
you can do primary residence, you can do investment properties. A very good program. A lot of 1099 borrowers we
What
can.
about reserves?
Reserves, again, you're talking about 6 to 9 month reserve, depending upon your credit score.
Is the rate same as bank statement?
Yeah,
or
so yeah.
DSCR?
So again, rate is a complex thing, yeah,
roughly
but
around there.
rates are gonna be around that. Like, so on a bank statement, P&L, you know, or 1099, your rates are gonna be same. These are really good programs. Even when I was introduced to this program, I was amazed like how easy it is to purchase the properties. People just, I'll tell you, majority of the people, they think this home buying and the qualifying is really complex. They cannot do it. You have, they're only like, you know, like they only know, okay, you need to have, let's say 720 score, you need to put 20% down, or there's a conventional FHA, but they are not aware of this non-QM sector loans. There is, you know, good amount of loans, you know, and these are very easy
That's
loans.
very good options.
Yeah, 1099.
Everyone can qualify.
Then you have another one is written VOE only. Here, I am not going to look at your, bank statement. I'm not going to look at your 1099. All I need is written verification of employment from your employer.
No bank statement, no nothing.
No 1099. All I need is written verification of employer.
Making them sound so easy. It sounds almost like 2005. Yeah.
So what's the down payment for VOE now? 20%?
Yeah, again, it's non-QM, you know, products, minimum 15 to 20% down, 680 plus credit score. Standard, I think, the PNL, ITIN, sorry, not ITIN, the self-employed DSCR type of, you know, requirement for that. Yeah.
Mr. Musa, you ready? You'll get a VOE from.
But guys, it's not like, you know, there has to be legit VOE, you know. Yeah.
Okay, now there's a last one. It sounds very interesting too.
Yeah. So this the last program, asset utilization, you know. Sometimes you get borrowers with like really good net worth, you know.
Okay.
So they have a lot of money sitting in their account. They cannot, you know, and this is again last option, you know. I would recommend this program for people who are purchasing primary residence. They have a lot of money sitting in their account. They have decent credit score. So whatever money they have, you know, in that bank account, you know, they have certain calculations, you know, let's say you have $1 million sitting in the account, you will do 24 months, divide that in 24 months, and whatever that amount comes in, you know, that will be your income.
whatever cash you're sitting on.
Yeah, sitting cash.
Is this also like kind of a DSCR kind of product?
Not exactly DSCRs.
higher.
Yeah, the asset utilization is again 6.875 to 7.5
That's not
interest
bad.
rates. Yeah, all of these, the rates will be higher only under no income documents, primary residence one. All other loan programs will be from 6.875 to 7.5 interest rate.
So pretty much these are non-QM, meaning someone has at least 15-20% down, has 660 credit score
660,
more.
680 credit score.
So if they don't have income, they have all these options to still buy.
Yes.
Even though if you are in a different country as a foreign national, or even if you don't have a green card or US citizen, you can just go ITIN.
ITIN number, yeah.
So pretty much in this, I think in this sector, big factor is have some money.
Yeah. Whenever a borrower who does not
It's a high
qualify
risk
for
Yeah.
regular FHA conventional VA loans, you can look into non-QM products and you can
At
qualify.
minimum at 15 all the way to 30%.
Yeah, 15 to 30%, 40%, depending upon. A mortgage is like, it's a little bit like sometimes you have to, because let's say if you don't have a good credit score, you need a little bit more down payment. Depending upon your loan scenario, you may need.
This is really good for like your contractors who don't some people who don't have green card. This is really good for restaurant owners. It's good for Uber drivers.
Yeah, I have
Or
done.
any
I'll tell you, in
small
last 5 years, I've done, or maybe 10 years old, I've done good amount of loans for people who like do taxi or Uber, Lyft, ride share, all that type of income.
And this is good for flip homes too if the condition is right instead of paying.
Here, see,
15%.
these are normally, that's a good
For
point.
DSCR.
No, these are for long-term ones.
But DSCR like maybe a 1 year.
Yeah,
hold
maybe,
and flip,
yeah.
hold and flip.
So these programs are for long-term
Yeah.
rentals.
But right now, like market is down.
Mhm.
We know it's going to bounce back. You can
Yeah.
get a good deal, get DSCR, keep it for a couple of years, and then sell it.
Yeah, you can buy it. See, I used to, before DSCR came into market, a lot of people will always ask, can I close this loan under LLC? And as a realtor, why people want to close loan under LLC. They want to keep that liabilities limited over there to that property only. But when you're doing a DSCR, you can close loans under LLC. You can just create whatever, yeah.
Yeah, so can we use this program? Some people, they don't file taxes.
Mm-hmm.
So can we use this program?
DSCR?
Yeah, no, then,
Oh, we
No,
have a lot of them you can
yes.
do without taxes.
So give me a scenario for your, let's say you
I
have,
mean, there are some people who don't file taxes for like 2 years or 3 years, but still they wanna buy a house.
yes, okay. So for a purchasing, from a lending point of view, yes, they can. Even if you don't, even if you have never worked in your life, you have money and you have credit score, you can purchase property. But
Can
it,
we
see,
use the same program towards the investment too, or is this is only for the prime?
okay. So DSCR, if we are looking at DSCR, someone does not have income,
Okay.
but they have money and they have credit score at least 680, let's say. Yes, you can purchase that. So they will look at it, and I think you walked in, I think we were discussing that earlier. So DSCR, what you need to remember, your mortgage payment plus your HOA, or let's say you have a condo fee, that number has to be equivalent to the amount of rent you can get from that property. If that ratio is 1, then you can purchase a property, and not just one, maybe you can purchase 10 properties. Does not have to, they are filing taxes or not filing. See, now they are, for 5 years, if they have not filed taxes, now the IRS and them, they will have to deal. We will not get into that if they owe bad taxes. When again, I think when we do the loan, that will come up on title also, right?
Yeah.
So they will have to, that's a different thing. That's a different issue if they have not filed taxes. If they don't have income, they have not filed, that's, and I'm not a tax accountant, but from the lending point of view, you do not need to have income to qualify for the mortgage. Even someone looking to purchase a property, we're talking about this program, this is a really unique program. People looking to purchase primary residence without income, you can purchase under this, minimum 20% down. Obviously, your interest rate will be higher Higher the risk, higher the interest rate. You know, if someone has 800 credit score, W2 income, you know, the stable 2 year plus, the employment's, history, of course you will go for a regular conventional loan. That's the best program. But when you have a buyer who does not qualify under the regular, like conventional VA, that's when we look into these non-QM options. I'm telling you, not only borrowers, I'll tell you with my experience, even a lot of realtors, they don't know the non-QM world. They are not exposed to non-QM world. And they have buyers who are like, they're looking to purchase a property, but they don't know the right person where they can get qualified. So non-QM loan provides a lot of, even gifts are acceptable.
Yeah.
Before gift was
I think we asked
really,
you all the questions, man.
yeah,
Good.
yeah, we can do under LLC. I think, the
Yeah.
closing under LLC, let someone buying property on 8400, let's say Boone Boulevard, and they just create a LLC, 8400 Boone Boulevard LLC, and they can purchase property under that. So closing will be done under that name, not the person's name. People, especially investors, they do that, they want to create, so they want to close properties under LLC to minimize the risk, minimize the liabilities.
LLC on somebody's name, right?
Hmm.
So, I mean, eventually you are using their name, information, and the credit score.
Yeah, but see, why would somebody close loan under LLC?
Exactly.
It's the same what it stands for, limited liability, right? So they will have their, there will be a person, whose information, let's say you are the LLC, you own that LLC, your information will be used,
Yes.
but you can close that loan under LLC.
Loan,
Yeah,
not the title.
yeah, yeah.
And-
That company, the property will be owned by, let's say, not by Abu Zar Walid, but that will be owned by, let's say, Galaxy Properties. Gift funds, okay? This used to be always really big. You can purchase under these programs. I have right now loans going on DSCR. You can use only your reserve part, guys. Reserve is something that has to be your money. And what is your money? If the money has been sitting for at least a month or two, that's seasoned properly, that's fully cooked, and it's ready to be eaten. So that's what the seasoning is. What other things? Self-employed, bank statement, yeah. So it all comes down to, I would say, we have borrower discuss. Let us figure out what will be the right program for your borrowers. Do not ignore, even foreign national. I'm working with Amal's one of the client. We have it's in Dubai. It's $2 million. He's looking to purchase $2 million properties. Documents are very easy. Don't just get fixated with the conventional VA loans. So that's it, guys. I would, whenever you have scenarios or any of you wants one-on-one training, you want to know more, please give me a call. I would personally, have that training arranged for you. Either myself or one of my loan officer will sit down and go over non-QM more in details. But best thing is always, yep. Haji.
There are some people here, the poor people who don't deal with Emiratis, I have a couple of questions for you, if you don't mind.
Sure.
So one question I wrote it in the chat as well. Does for foreign nationals, the FIRPTA rule still apply when you're selling? The seller still has to withhold a portion of the proceeds for tax purposes?
That PTA, I will have to get back to you on that one. That's like PTA question. That's more
Mr. Javed,
towards.
I think more than likely it applies. That doesn't go away
I see.
because they're still
Second
foreign
point.
nationals.
Sure. For the non-QM, I know when brokers or lenders like yourself do conventional loans, it's usually lender paid. What happens to that in non-QM? The commission or the rebate you're making, it will be added to the loan and to the buyer eventually, right?
No, see, lender paid and borrower paid compensation. It's more to do with, as you said, towards the lender and how the loan officer get paid. So with I think with the lending, every rate pays certain amount of money to the that loan officer or lending company. But if a buyer wishes to purchase a lower interest rate, there will be additional amount of money that the person will have to spend to get that lower rate. But borrower paid, lender paid is more for the lenders. If your borrower is looking for lower interest rate, loan officer either will have to kind of reduce his compensation or charge the borrower that extra point to kind of get that rate.
I see. So for the par rates, or like let's say you said maybe 1.5% to 2% higher, does that include your compensation as well?
Yes, normally, so whenever the loan officer, usually they quote the rate, their compensation is included, or sometimes they want to be very competitive. They want to win the rate because borrower is shopping, win the deal, their borrower is shopping around. So they will compromise on their commission. Let's say a loan officer is supposed to be making 1.5% on every deal, and they don't want to lose this client. So instead of making 1.5%, loan officer will compromise on, let's say I want to make only 0.75 here, and he will or she will reduce her compensation.
And that's important for us realtors to know that it's not apple to apple. If somebody offers your clients an on-cube that's much lower, you need to ask for details because there may be some, I don't know, asterisk there saying, the buyer needs to pay for my compensation or whatever. So
this is
see the whole package and compare apple to apple. Thank you.
Yeah.
What's up?
Javed, I would like to add, it all comes down to who you're dealing with, that loan officer. Compensation is very important thing when a loan officer is going over the fees. I think normally initially when they issue a loan estimate, that loan officer has to make it clear, okay, this is let's say a bank statement only loan with your credit score, down payment. You are with the today's market, let's say you're getting 6.875 interest rate, there will be half a point cost to it, or this is a par. So it all comes down to the loan officer, how he or she is making it clear from the beginning, and a communication basically.
Thank you.
You're welcome.
Any other questions, guys? Anyone? Any questions?
Hello, guys.
Hanji Aisha.
Miss Aisha.
Yeah.
Hello. I have a quick question, Imran.
Yes.
So, different types of loan, does it make a difference when it comes to closing costs significantly because it's a non-QM loan, or that has just to do with the the client itself?
Okay, this is important question. I would say, with my experience, what I've seen, especially I would say if we are doing a transaction in Virginia compared to Maryland, normally comes a little bit higher in closing costs because they collect taxes in advance, so generally with my experience, I would say closing cost comes around 3% of the sales price, but that's not like, okay, your closing cost will be always 3%. I have seen when you're buying a house for lower, let's say $200,000 house, your closing costs will be higher in terms of percentage versus
Yes.
you're buying a house, $1 million house. Because see, some of the fees, they don't change. Like let's say what is the closing cost? Your lender fees, title fees, government recording, transfer taxes, other fees, realtor. So when you're doing a non-QM products, I would say your closing costs may be a little bit higher because non-QM loans have higher interest rate, and borrower, they don't want to go for higher interest rate. And how Javed Bhai was mentioning that about the compensation or buying rate. So I personally advise people if they are looking to purchase and they want to plan, and again, this is just for overview, your closing costs will be around 3%. But if you're going for non-QM, keep at least 1.5 cushion, so that will give them a better planning when you're purchasing property. But closing costs should not be higher unless they are buying a point or they have to buy a point in order to qualify. Because, yeah, the lender fees on a non-QM loan and a regular loans are approximate, I would say almost same. Your title fees will not change. Just because you are going for non-QM loans, title company will not charge you, the additional closing costs. Your transfer taxes are irrespective of, you're buying, even I think you're buying cash property, your transfer taxes are going to be same. Yeah.
Absolutely.
Yeah. So yes, bottom line, when you are going for non-QM loans, if you are telling them your closing cost is going to be around 3.5, tell them like, hey, consider a 1% higher closing cost, or you may have to buy the point in order to qualify.
Makes sense. Well, thank you, Imran. I appreciate it.
You're welcome.
Guys, let's say thank you to Imran, man, for coming and going to this.
Thank you very much, guys. And as I said earlier, please, you have question on non-QM, you would like to know more, I'm ready to do one-on-one training, or in over the phone, in office, and I would love to kind of qualify more buyers for you and your team.
No, thank you, sir. Let's have fun.
Thank you. We appreciate it.
Thank you, Pastor.